I'm sure most of you save your money in a bank account. But do you know how banks work? How do they make money? And how does lending create more money than is in existence? This is what we'll explain in this video. First, let's understand what happens when you save your money. After you've worked hard and earned your income, you may decide to put some money away in a bank account because it's safe, and most bank accounts pay you interest, even though interest rates have fallen substantially in recent years. Those banks which hold customers' money is known as commercial banks. When commercial banks receive your money, they lend it back to other people or businesses at a higher interest rate than what they pay you. Therefore, they make a profit from your deposits. Banks usually only keep a small proportion of your deposit and lends out the rest. This is known as fractional reserve banking and is the most common way banks operate. But here's something perhaps you didn't know. Through the process of lending, commercial banks create more money than deposits. Here's an example. Let's say A deposits $1,000 in a bank account. The bank then keeps 10% of it, that is $100, then lends out $900 to an individual named B. And let's assume B needs the money to pay C. C takes the $900 and deposits the amount in a bank, which again lends the money, and the cycle continues. In theory, this means that with an initial amount of $1,000, $10,000 was created, that is 10 times more. This is known as money multiplier theory, which arises specifically because of fractional reserve banking I explained earlier. The less money the banks hold, the more money is created in the economy. So in our example previously, if the banks decide to retain 1% instead of 10%, the amount of money created increases from $10,000 to $100,000. However, this also means that the bank is at higher risk if customers withdraw their money, as they won't have it. That is why having a minimum reserve requirement is necessary. As you can see, banks need to balance how much they lend versus how much they need to keep as reserve. And this brings me to the end of this video. If you liked it, please click on the like, share and subscribe button. Thank you for watching.